A very good morning. Wishing you a great day and a great week ahead. Welcome to today's episode. We're talking about three things today. Mixed verdict on NFP, stocks up, yields down, impact of seasonal adjustments on jobs data, and the week ahead. Markets rendered a mixed verdict on the US employment report. Stocks were up and yields were down. The US economy added 850,000 jobs in June. That's a very good number, but the pandemic makes the report difficult to interpret, especially with Labor Department seasonal adjustments, is what a reporter on the Wall Street Journal argues. I'll speak more about that in a bit. All three major indexes were up for the day and all ended the session at record closes. The S&P 500 index on a 7-day streak of gains and the Nasdaq both rose about 0.8% on Friday. The Dow Jones was up about 0.4%. The action wrapped up a solid week of gains. The Nasdaq was up 1.9% over the last 5 trading days, posting its 6th weekly advance out of the last 7. The S&P 500's historic run added 1.7% this week, and the Dow also gained 1%. But the benchmark 10-year US Treasury notes dipped on the day to about 1.43, usually a risk-off indicator. Perhaps traders believed the job numbers wasn't sufficient to change the Federal Reserve's thinking on rates. For now, investors continued to put inflation concerns on the back burner. They bought growth stocks in the tech, consumer discretionary and communication sectors and sold some cyclical stocks. Tech stocks added about 1.4%, while shares of consumer discretionary and communications was also up about 1.1% and 0.9% respectively. Among the gainers, Alphabet shares climbed about 2.3%, while Apple also was up about 2%. Meanwhile, energy and financial stocks in the broad index lagged 0.2% each. Meme stocks also traded lower, with AMC Entertainment Holdings slipping about 4.2%. Also, shares of ride-hailing giant DD Global fell about 5.3% after reports that it was blocked from adding new users as China's internet regulatory reviews its cybersecurity. You never know what comes out of China. Just after the IPO, China's internet regulator reviews its cybersecurity. Interesting. Moving on, jobs is a big part of the equation on how the Fed is looking at the economy. Understanding seasonality on the jobs reports is something important, is what I felt. So this is something that I read out of the Wall Street Journal. The Labor Department on Friday reported the economy added 850,000 jobs last month, more than the 506,000 economists expected, and a welcome step up from May's addition of 583,000 jobs and April's disappointing 269,000 jobs. There were big gains in a number of services categories such as restaurants and retailers, a reflection of how, with the easing of COVID-19 crisis, the job market is healing. The strength of the report also suggests worries about the availability of workers, while valid, may have been somewhat overstated. But if drawing conclusions from 1 month set of numbers is always dangerous, it's doubly so now. The pandemic has thrown many of the old patterns of hiring out of the kilter, and the resulting volatility is getting magnified by the adjustments the Labor Department makes to account for seasonal swings in hiring. Take jobs in education, for example. In a usual year, these register a big decline in June as schools let out for summer. The Labor Department's seasonal adjustment process anticipates this decline, bumping up the June figures to get a better sense of where the job market is trending. Then in fall, as schools go back in session, it adjusts the figures down. But in a pandemic year, education employment was already lower than usually going into June, while expanded summer programs aimed at helping students catch up may have additionally led schools to hang on to more employees. The result, before seasonal adjustment, the Labor Department recorded a decline of about 607,000 state, local and private education jobs. In a normal June, that decline would typically be greater at around 876,000. So after adjustment, the Labor Department recorded a gain of 268,000 of those jobs. Now, does that mean that the June jobs count was somewhat inflated? There are more moving parts here than what is happening at schools. In fact, June is a seasonally strong month for overall job creation, so the Labor Department makes downward adjustments. Unadjusted, the employment report showed the economy added actually 1.15 million jobs last month. April and May are also big months for hiring, so the job gain figures for those months also got pushed lower. July is the opposite, so when this month's report comes out, the figures will be upwardly adjusted. Now, if this is all too confusing, one thing we can say for sure right now is that demand for workers is high and job growth is strong. For now, perhaps knowing that is enough. Lastly, the week ahead, the Fed minutes are due Wednesday, with investors seeking more details on the debate over inflation and tapering, plus any potential insights on officials' view on the deluge of liquidity in the system due to asset purchases. The ECB minutes follow on Thursday. G20 finance ministers and the central bank governors will convene in Venice starting Friday for a summit after 130 countries backed a minimum global corporate tax rate last week. China's factory gate inflation probably slowed to about 8.7% in June from 9% as some commodities fell from recent peak. Consensus is for CPI to hold at about 1.3%. The data is due on Friday. Japan's household spending figures should send some light on how consumption held up midway through pandemic restrictions. Wage data will also be out. The labor market remains in focus in the form of the June JOLTS report on Wednesday. The May survey showed a record number of both employment openings and quits, showing that workers are increasingly confident that they can find other jobs. In terms of earnings, I'll be looking out for Levi Strauss, which is reporting the second quarter earnings on Thursday, apart from TCS. While Stellantis will host an investor event to discuss the car maker's electrification strategy. That is the update. Stay safe and healthy, everyone, and I'll speak to you tomorrow.